In the weekend video, I want to take a look at what's going on with the commodity complex. Um, it's pretty clear that this was an intermediate cycle low, and as you can see here, price is getting pretty close to breaking below this intermediate cycle low. Um, if it does, and I think it probably is going to, that's almost certainly going to signal that the move down into the larger 3-year cycle low has begun. I was kind of hoping this bounce right here would have a little more oomph, maybe get above this peak at least marginally before starting down into the 3-year cycle low, but it doesn't look like it's going to do that. So let me widen the chart out a little bit more so I can show kind of what's going on. Okay, so here was our last major multi-year, 3-year cycle low in early 2016. It kind of came in conjunction with the 4-year cycle low in the stock market. That does happen sometimes at the major 4-year cycle low in stocks. The selling pressure kind of infects everything, and sometimes both stocks and commodities will bottom together, which they did in 2016. The next 3-year cycle low is going to be due. They tend to run between 3 years and 3 years and 6 months. So ideally, the next 3-year cycle low would come in early to mid 2019. Somewhere here in the early spring would be the ideal date for this bottom. This 3-year cycle is right translated. You can see the top came here about almost 2.5 years into the cycle. So the odds are pretty good that this 3-year cycle decline is not going to drop below this 2016 low. And remember, this occurred with oil at I think it was about $26. It's my opinion that this is a generational low in the CRB, and it's not going to be broken probably ever or in our lifetime. And this would seem to confirm that the cycle is right translated, strongly so. So we would not expect the next move down into the 3-year cycle low to break this 2016 low. And I don't think it's realistic to expect oil to go back down to $26. Assuming we do break this intermediate bottom here and confirm that this intermediate cycle is left translating and that the whole complex is beginning to move down into the 3-year cycle low, then we're going to start to look for a bottom sometime in early to late spring of next year. Now, I will say this, it's getting really late in the oil cycle, so I don't think we're going to break this low and get a sustained push lower. I suspect it's probably going to be something like an undercut and another bounce, and then it'll be that bounce that will probably fail pretty quickly and then roll over, and we'll get that final move down into that major 3-year cycle low. So now let me switch over to oil. All right, oil, of course, is the major driver of the CRB. So you can see here in the oil market has already broken below this intermediate cycle decline right here. So oil has already confirmed a left translated and failed intermediate cycle. So I think it's going to pull the rest of the commodity complex down, and the CRB is almost certainly going to break that August low. But this daily cycle in oil is very mature. I believe this is day 60 on Friday. So oil is due for a bounce. That's why I think that any break in the CRB below that August low probably isn't going to be a sustained break below it, but probably just a marginal break, and then we'll stair step back up a little bit and then roll over and move down into that final um, multi-year larger degree cycle low in the spring. So I would be looking for a bottom maybe sometime. I'm going to take a wild guess and say next week we're going to get our bottom in oil. Um, as I said, we're on day 60, so we're definitely due. Um, so here's a major support level right here at 58. So maybe we come down and tag that 58 level and bounce from there. Again, a convincing bounce for several weeks, and then we roll over and come down and make a lower low and get our final 3-year cycle low in early of next year. Widening the chart out a little bit, we can pick out some potential support zones for the 3-year cycle low. We're kind of into a major support zone here around 60. So as I said, we're getting pretty late in this daily cycle. We could get a bottom, anywhere in this zone at around $60, some kind of a bounce before we get that next and presumably final leg down into the major multi-year cycle low. 55 here is a potential support zone for a final multi-year cycle low. The 40 to 45 is also a very strong support zone that would potentially give us a final 3-year cycle low. And overall, this entire 3-year cycle in the CRB appears to be one of basing, just a very large multi-year basing pattern. All right, so here's the CRB. So again, like I said, this appears to be just a very large basing pattern. I was kind of hoping again to get maybe one more higher high above this to right translate the cycle even a little more, but it doesn't look like we're going to. It looks like the move down into the 3-year cycle low has begun. So we were not able to break through this resistance on this 3-year cycle. But I think this large basing pattern is going to set the commodity complex up for a very strong rally out of the 2019 3-year cycle low. All right, so here's an even wider look. You can see the bubble top in oil here, the crash. We get a right translated 3-year cycle driven by QE. This was, of course, where gold topped. And then another 3-year cycle low here in 2012, which left translates. And as expected, a left translated cycle would typically drop below the previous cycle low of the same degree, which it did. And we get that very destructive move down in oil, down to $26 a barrel, and put in what I think is probably a generational low in the commodity complex, probably never to be broken in our lifetime. And then this 3-year cycle is unfolding in what appears to be just a very large basing pattern. Now, in regards to gold, the gold cycle is a little bit different than the CRB, although gold is part of the commodity complex, and it will probably be influenced by the CRB moving down into the 3-year cycle low. The gold cycle is 8 years. And usually gold will bottom a little before the CRB. And as many of you remember, gold completed its bear market bottom in December of 2015. So it was a little ahead of the CRB, which came in the spring of 2016. I suspect the same thing is going to happen here. Gold is also in an extended sideways basing pattern ever since that bear market bottom, and I suspect gold is probably going to complete uh, its yearly cycle low in probably in December of this year, and I expect it will bottom a little ahead of the CRB, and then um, once this long basing pattern is done, I think the commodity complex is going to start um, moving much higher, driven by inflation in 2019. All right, so here's the gold chart. Again, you know this same extended basing pattern here in gold that we're seeing in the commodity complex. The difference, of course, is that gold gotten you know nowhere even vaguely close to the 2002 lows. So the gold market has been much stronger than the rest of the commodity complex, and it has been in this extended sideways basing pattern. Very similar to the rest of the commodity complex, only at a much higher level. So uh, as the commodity complex starts moving down into that 3-year cycle low, it's probably going to drag gold down as well. Um, I do not anticipate that gold will. I think there's almost no chance that gold drops below the 2015 low. Um, and confirms a bear market. But we could test. You know, it's possible that we could test the post-election lows here and just you know stay stuck in this long basing pattern here. But once the CRB bottoms, and I think gold's going to bottom a little ahead of the CRB. I think we're going to be finished with this basing pattern, and the entire commodity complex, including precious metals, will start moving up and signaling long overdue inflation. Um, the printing of QE for years and years so far has only inflated mostly stocks and bonds, but it's time that inflation starts to get into the commodity markets too. And I think once the CRB completes this 3-year cycle, though, I think that it'll be time for inflation to start moving into the commodity markets.